using the combination of different indicators and tools to come up with a strategy.
Guys, this is so simple.
Cause I'm in it for the paper, in it for the paper, in it for the paper. Wake up in the morning, put my socks up, cause I really gotta hustle.
Welcome back to another YouTube video, guys, from the Real Forex. My name is Gunolo Musikati, aka the Forex Godfather. Now today we only continue with part 2 of our lesson of what we discussed last time. Last time we was talking about RSI, support and resistance, and also we're talking about Fibonacci and how to combine these tools to come up with a strategy that can help you trade your trends. Let us go to our video.
Alright guys, now let's get to it. First thing I'm going to do, I'm going to recap what we did last week before I continue. Now last week I discussed how to use support and resistance, Fibonacci and RSI. I explained the history and also the application. Now today I'll be showing you how to use all of this in combination in a chart. But before I get there, let me just recap. Well, support and resistance in the market is the roof and the floor of the market. Let's say that the market was here and then went up there, respected that level. When the market comes back down, respect the same level that it previously respected. We call that support. When the market goes up again and then respect the same level respected prior, we call that a resistance, which means that level is very important. All right, now Fibonacci is used to trade the retracement and also to predict where the market could possibly turn when it reverses. For example, let's say that the market is in a downtrend. All right, the market is going down. Now when the market goes down, the market obviously take breaks. The market does not go straight. Let's say even if you are going to Cape Town, you don't go straight. You know, there's no straight road in the world. What matters is the direction, not the path. All right, now let's say that you enter here, you buy, you sell here, and then the market goes down. All right, create this low, and then the market push up. When the market push up, how do you know where the market is going to turn? Let's say that you don't have this trend lines on the side. How do you know? This is where Fibonacci comes in for you to determine this level. The market will turn around this level in Fibonacci, this significant levels. However, I've explained last week that my favorites is 0.5 and 0.618, and if you want to know why, please watch the previous video. All right, now let us go to RSI. RSI helps you determine the momentum and the strength of the market price action. Let's say the market is going up, right, and the market passes 70. When the market is here, we say that this point here is overbought, which means the buyers have are exhausted and most people are pulling out and taking off their profits. Now you need to be careful about buying on this level when the RSI is above 70. When the RSI is below 30, we say that the market, the price action is oversold, which means you cannot sell anymore. You need to wait and then reanalyze and check, look for a next possible entry. Now where does 50 comes in? Let's say that the market, look here, the market is going down here, right? As the market is going down, say that the market is coming down. Once the market passes this level from 70 zone to 50 towards 30 zone, we say that the market confirms that you have a strong selling trend. When the market comes from below going up and then passes 50 to the upper side, we say that you have a strong up trend, confirms, which means you can even scale up. Scaling up is increasing number of entries. All right, now let me show you how you can use this strategy in a chart. This is a pre-analyzed chart. I took the trade last week and I'll just explain to you how I'd analyze this. All right, now the first thing that I did was I identified a trend. That is the first thing that you must do when you use Fibonacci. You see here, this is a higher low, all right, and now this is a lower low, lower than the previous low, and this is a lower low, lower than the previous low. This is a high, right, and then this is a lower high, higher, lower than the previous high, and this is a lower high, lower than the previous high. Okay, now the market was pushing down. The market touched here, went up, came down, touched here, then went up, came down, touched here, then went up to touch that level, then went down, and then broke out of the trend line. Now the question becomes, how do you introduce Fibonacci? Okay, now Fibonacci, guys, when you're in a downtrend, you put the first point at the swing high of whatever current price you are dealing with, and then you put the last part on the lower part, on the lower level, which is this point here. The first point, the second point. All right, these are swing high and swing low. Now what you want to determine is determine when the market goes up, where is the market going to turn to continue going down? Because what you know is that you are in a downtrend, however the market now is pushing up, so you want to know that for you to sell again, where is the market going to turn? So I told you that the important levels are 0.68, 0.5 and 0.3, which is this one. Now the market turned way around the 0.68 and 0.5 zone. As you can see here, the market turned on the zone. All right, it's not a coincidence. We call this a V.V.I.P zone. Now where does support and resistance come in? If you see here, if you look here, all right, the price was previously rejected here, all right, and the price was previously rejected here. It was rejected here again, which means now this level becomes very important, which means there's a possible rejection on this level. Now when the price went up again, I knew is most likely to be rejected here. Now I have two combinations. The first confirmation is that I'm in the V.V.I.P zone, all right. The second confirmation is that there's a support, there's a resistance level, significant, important, strong level of that level. All right, now I have two confirmations. And now where does RSI come in? Let me just insert my RSI. Now that we have inserted our RSI, let us look how does RSI fit into the equation. Okay, now if you can see here, this level, it's 70. All right, this level is 50 and the lower part is 30, as I've already explained. Now let us check what happened when the market reversed. What has happened to the RSI? Okay, see here, this is where the RSI is. This is where the market reversed. This is the Fibonacci level and the resistance level, as I've explained. Now look down here in the RSI, this part here. The market was overbought. Guys, this is so simple. The market was overbought. Now there's a third confirmation. The market is overbought in the RSI. All right, and another thing, there's a resistance level, and also we're in the V.V.I.P zone. That's a definite sell. That's an obvious sell. There's no better way of explaining this. Okay, now let us look at this part more on RSI. You see this part? That's where the market turned to go up. And look down here, what happened here. The market was what? Oversold. It was up below 30, and then here the market was what? Above 70. That's all I have to say today, guys. Now if you want more videos like this, please subscribe and hit the like button, and then tell your friends to subscribe. We also offer courses, we offer signals, we offer training, we offer mentorship. The contact details of our company can be found on the description. From your boy, the Forex Godfather, aka Mr. Bonolo Eugene Musikatse. I thank you for tuning in. Until next time, guys, stay safe and be safe. Thank you. I'm out.